On this episode of Your Cup of Counsel, we're talking about all things insurance, changes that went into effect in January of this year, and what questions you need to ask yourself when you're trying to figure out how much insurance you really need. On this episode, we're also drinking coffee from Cup of Joy right here in San Francisco.
Hi, Anjay.
Hi.
We are here today to talk about insurance, and I know basically nothing about insurance. And you, of all of my friends, are probably the most knowledgeable person about all things insurance. So I'm very happy
I love that for me.
we're talking about this very nerdy topic that most people don't really want to talk about. But you know all about it. And honestly, it's a really important topic and something that I think we've decided is really important to educate people about because of what could go wrong if you don't have insurance. So why don't you tell us about some new laws that I know came into effect recently? But why don't you start by just telling us about why insurance is important, just to begin with?
Okay. So this is one of those funny things that I always talk about at cocktail parties. People say like, oh, what's one thing that I need to know? And I will tell them, if I'm on a soapbox, the one thing I will dive into first is insurance.
And you still have friends after that. So
I know, and it's so nerdy, but it is so, so, so important. And doing the field of work that I do, personal injury litigation, I mean, we're suing people and we're going after insurance proceeds. And
Right.
so determining how much insurance you need, making sure that you have the right amount of coverage, these are all really, really important questions that I think everyone needs to self-assess. It's January right now, so we thought it was kind of a timely topic, kind of a wellness check. What insurance do you have? Do you have enough? And then there's also some important legal changes that happened starting January 1st this year. So there's two that we're going to talk about today.
And so let me just to break that down a little more. I mean, I'm sure you've had situations where potential clients or clients come to you and say this horrible catastrophic thing has happened. And you tell them, unfortunately, there isn't a whole lot we can do because there's just no insurance coverage to be found. Is that and like how tragic of a situation that is?
Yes. And it happens all the time.
Mhm.
Like very frequently we'll get a call, usually in the context of a car accident. So someone's in a car accident, no fault of their own. They've been rear-ended, horrible injuries. And then they find out the person that hit them either didn't have insurance or had inadequate coverage. And what do I mean by inadequate coverage? It means not enough insurance to cover the harm.
Mhm.
And so let's talk about the legal change that happened in
Mhm.
January, because there's a new law in California. It's Senate Bill 1107, increase the minimum limits of insurance that you have to carry. So before January 1st of this year, minimum insurance limits in California were 1535.
And what do those numbers mean? For those of us who don't understand what those numbers mean.
For the non-insurance nerds, it means that $15,000 is available per person that's involved in an accident. $30,000 is the max available for everyone in the vehicle. So if there's two people, they each get $15,000. If there's four people, they still have to split that same $30,000. The pot does not grow if there's more victims. No one can get more than $15,000. That's the individual limit.
Mhm.
And then the five, the third number, that's the property damage number. So before January 1st, minimum limits in California were $5,000 for property damage. I don't even think you can get a bumper
Wow.
repainted for $5,000 in California in 2025.
And does the 1530, does that limit cover like medical expenses? So if you're catastrophically injured, you have to, and you don't have health insurance, let's say, that number still has to cover
Yes.
everything.
Those were the limits before January. Now they have gone up, they've doubled to 30, 60, 15. So that means $30,000 per person involved in the accident, $60,000 globally for everyone involved in the accident, and then $15,000 is the new property damage limit. So for a lot of people, they think, oh, that's great. We've doubled the insurance that's available as a minimum tier in California.
Mhm.
But really, if you think about those numbers, that's not a lot of money.
Mhm.
It's a lot more than it was, in December of last year and for the last 40 plus years, which
Wow.
is absolute insanity. So let's talk about that. So the original limits, the 1535, started in 1967 and had not been adjusted since then.
When milk was 2 cents.
I know, right? So I
I
looked it up because I thought this would be an interesting facts for our listeners and for our followers. So in 1967, when the original limits were set, Minimum wage was $1.40. Annual income for most Americans was $7,300. So that $15,000 limit per person, annual incomes were half that. So that still would have been like 2 years of earnings. You could buy an entry-level car in 1967 for $1,600 to $2,300.
It was a simpler time.
It's a much simpler time. So when you're thinking about
Wow.
like a property damage coverage of $5,000, you could buy 2 new vehicles for that price. But in 2025, you could not. So the numbers they were so outdated. They needed to be adjusted for cost of living, for inflation, for wage growth, everything.
But why did it take so long for them to get changed?
Turns out insurance companies are very powerful and the lobbies around them are very powerful. And insurance is a for-profit business. And if they have to offer more insurance coverage, then they have to pay out more on claims, and they don't like to do that. So by keeping the limits low, more people can get on the roads, have access to insurance. And then unfortunately, if there's catastrophic events, there's just not been enough coverage going around.
And so what you're talking about is just the minimum required insurance that everybody has to have in order to drive, right? But people can add additional insurance on top of that.
I'm so glad you asked.
I know you would be. Tell us about that.
Okay, so they can and they should. And this is me back on my soapbox.
Get on there. Tell us all about it.
So there are so many things that people don't consider. I think a lot of times when people go to get insurance, they go on to like Geico, Progressive, AAA, whatever website, online. Sometimes there's some brokers where you can go in and say, I live in this city, this is my car. And then they run a bunch of different company quotes. And people are just looking for the cheapest quote. And they don't really understand that really matters, that how much coverage they're taking out really does matter. And they just want to pay the cheapest amount. So they're going to buy just the state minimum. And then they're leaving themselves open to exposure if they are in a car accident. I mean, listen, things like car accidents don't have to be intentional. Like you can have all good intent, get on the road, drop a coffee in your lap, get the sun in your eye. Something can happen that is totally out of your control. And you can cause an accident, and you want to make sure that you have enough insurance if you've injured someone to be able to right that wrong.
Yeah. So what do you recommend? What do people need?
So it's a loaded question. I looked it up because, of course, the internet will have a nice little metrics for us. So what you're supposed to do first is look at your net worth, right? Because there's a couple different things when you're purchasing insurance that you want to think about. What am I protecting? That first bucket is money, but it's also people. And we're going to talk about the people part in a minute because that's the second legal change that happened in California. But the first part is money. So how much money do you have? Are you a homeowner? What do you earn? What's your annual earnings? So you're supposed to come up with what your net worth is, plus all your future earnings. And that's the minimum level of coverage that's recommended for you.
So it could be a lot if you're a high earner.
It could be a lot if you're a high earner or even if you're a homeowner. I mean, you should be getting $500,000 or $1 million underlying policy and an umbrella policy if you're a homeowner in a place like the Bay Area where home values are very high as a minimum. If you own a home and you're driving around with California minimums, a 30-60 policy right now, you're exposed.
So, and if you get into an accident and you have a 30-60 policy, and the insurance can't cover the injuries, does your home, all of your assets, all of your things
come after your assets? Now there are homestead exemptions in California. So there are different, depending on how many assets you have, you're going to get some offsets for some like basic essential needs. They can't take every single penny that you have, but you are opening up your personal assets. Absolutely. And so you want to make sure that you have insurance coverage that at least equals your assets. And then the recommendations that I found online even said, and then project out your future earnings and add that into the asset calculation, which is a lot. And I'm pretty sure if most people listening did a self-assessment, they would be grossly underinsured. The other thing to keep in mind is the entry-level cost of insurance. So to buy that California minimum, the 30, 60, 15 is, I don't know, depends on what you're driving, your driving history, your profession, all of that. But say it's $200 a month. The difference between the next tier, so going to $100,000, $300,000 policy, is like $18 more a month.
Mm.
It's de minimis. And I think that's what people don't really know. So when you're going up in tiers, you're covering yourself so much more, and the cost to you is really not significantly increased.
Mhm. Yeah. Yeah. I mean, I think a lot of people just think that bad things are never going to happen to them, and that they won't ever need it. So why are they paying for something that they may or may not ever need? But your point is, if you do need it, it could be really, really bad. So, you're constantly doing that risk assessment, I guess, in
Absolutely.
your
I
own
mean,
mind.
that's the whole game, right? It's like
Mhm.
insurance is the one thing that you hope you always pay for and you never need.
Mhm.
It's like life insurance too,
Mhm.
right? When I'm gone, I won't know if my family benefited from my policy or not, but it sure gives me peace of mind now knowing that I have it if something were to happen that they're protected.
Yeah. So let's talk about the people part of it. Like, who do you protect? How does a single person versus someone with dependents kind of think about this differently?
Okay, great question. Because again, going back to looking at your assets. So a lot of people think, okay, well, I'm not a homeowner and I have an entry level vehicle. So I'm fine with the state minimum, right? The 30/60. I don't have an asset to protect. But think about the people around you. Do you have small children? Do you have a spouse?
Mm.
Or even just yourself? So in California, there's what's called uninsured, underinsured motorist coverage. UIM is the shorthand. And that protects you. So you don't have to rely on a third party. So if you're in a car accident with somebody, they have the state minimum, which again now is 30/60, and your injuries are worth 75,000. You had to go to the hospital, you had to get a complex surgery on your leg, you've got this huge medical bill that you have to pay back, you missed work for 6 months, your case clearly exceeds $30,000. If you had the foresight to have uninsured motorist coverage, then you say, "Thank you, third party, I'll take your 30,000." And then you turn around and you look at your own insurance carrier and you say, "Hey, I had the foresight to carry $500,000 in UIM. The person that injured me only had $30,000, so you get the difference." You
Hmm.
don't get to stack the two policies, so you don't get your 500 plus their 30. You would get 500 as the max you could get in insurance total, and so your insurance company gets the benefit of the first 30. But you would still get 500. 500 is a lot more
Yeah, no
than
kidding.
30,000.
So could someone just decide, I don't care about anybody else but myself, and I'm just going to buy all the UIM coverage in the world and just protect me?
No, thankfully, no.
I'm not saying I would do that.
Right,
Just to be
right.
clear.
Yeah. But thankfully, no. So in California, you have to have the same, whatever amount of UIM coverage you want, you have to carry the same third party coverage. So if
Mm.
I carry a 250 policy, I can then, if I want $250,000 of underinsured coverage for myself and my family, then I would have to carry $250,000 of liability coverage on my primary policy.
Got it.
Yeah.
Okay.
And there's some changes on UIM law. So that was the second part of what I was going to kind of the legal update for January. There was another Senate bill. It was Senate Bill 371, and that took effect in January of this year. So rideshare companies like Uber and Lyft before January 1st of 2026 had to offer $1 million of UIM coverage to all riders.
Hmm.
So what does that mean? That means I'm on my way to work. I'm in a rideshare vehicle. We get T-boned at an intersection. The person that T-bones us only had, again, this is last year, 2025, only had the $15,000 minimum state policy. The rideshare vehicle that I was in would cover me for an additional $985,000. Right? Is that math right?
Yeah.
$15,000. Okay.
Nailed it.
So up to $1 million.
Yeah. Wow.
That changed in January. Now it's rolled back. What do you think the new number is?
I don't know. I don't want to know.
60,000.
Wow.
It went from $1 million to 60,000.
So if you're in an Uber and you get into an accident, you're covered up to $60,000 unless you get your own independent insurance.
Yes, mostly correct. You still have to get the third party. So if somebody other than the rideshare driver is responsible, that policy pays first.
Okay.
Then the UIM policy for the rideshare vehicle would kick in.
Mhm.
But you could do yourself a solid, again, by carrying your own underinsured motorist coverage on top of that.
Mhm.
That would kick in to handle the difference. So I always tell people, you know what? I'm hoping that you're altruistic. I'm hoping that you are getting big policies because you want to protect your assets and you care about people. You want to protect them. If you make a mistake, you want to be able to right that wrong, but also to protect yourself and your family and your loved ones. If something horrible happens, that you'll be able to provide care and rehab and all the things that are needed to
Yeah.
get into a better space.
Yeah, I mean, you bring up a good point because I'm a single woman with no children and no dependents, and I think about this sometimes, but it would be a horrible, horrible, horrible thing if I hit someone with my car or if I injured someone. I would feel guilty for the forever, you know? So there's other ways to look at this other than just protecting yourself. Like,
Absolutely.
do you want to be the level of responsible human that really cares about members of our community and, maybe injuring somebody else and not being able to help them financially support that,
Yeah.
Yeah.
Yeah. And I think it's important. I'm hoping that maybe there's some listeners that are in the insurance business because I have reached out to different insurance brokers, over the course of my life when I'm looking at insurance policies. And a few people that I've interacted with will make recommendations like, oh, are you a homeowner? Are you this? Are you this? And before I was a homeowner, they would say, oh, you just need to carry the state minimums. Like that's the recommendation that I hear out of the broker
Mhm.
on the phone because they're trying to save you a buck.
Yeah.
And like on the one hand, I appreciate that. And finances absolutely matter, right? Like
Yeah.
you only can buy the insurance that you can afford, which makes absolute sense.
Sure.
Nobody's going to fault you for that. But if you
Mhm.
have means, there are other things in the analysis to consider. Like if you injured someone, do you want to be able to right that wrong?
Mhm.
And I think that's hugely important for me, for a lot of people in our community. So keep that in mind. Don't just agree to whatever number the broker gave you over the phone. If they say your assets, are not high enough, you don't need more coverage.
Right.
There's other things in the equation that you should be taking into consideration.
Yeah. And you don't want the first time that you learn about all of this to be when you're injured or when someone in your family or when you've injured someone, right?
Yeah.
Like now's the time. It's a new year, 2026. Let's get our
Absolutely.
affairs in order.
Absolutely.
Yeah.
Absolutely.
Do you have to have a car in order to get insurance for yourself for any of these things?
No.
So if you're just a person without a car who takes rideshare, for example, or Waymo, or
Yep.
whatever, which, people that live in San Francisco or big cities do.
Yep.
What are the insurance options that are available and do they cover the same things? Like, let's deal with that.
Yeah. So all great questions with a few nuances. So you can get what's called a non-owner policy. We just did this for my nephew. He's away at college. He had a car before he left. He didn't take a car with him. But you want to foresee the scenario where like somebody else in the dorm has a car and maybe kids are out drinking and he's going to be the designated driver or just finds himself in that scenario and you want him to be able to step forward and drive that vehicle. So we canceled his car insurance because he doesn't have a car anymore, but you can take out what's called a non-owner policy. So that essentially covers you if you're driving other people's vehicles. And then the nerdy part of me will also admit that you have to read your policies, which I know is really, really hard, or deal with a broker. And you can tell the broker what specific things you're looking for in coverage.
Mhm.
So there are some policies non-operator policies that will cover you only when you're operating a vehicle. There's also some non-operator policies that will cover you when you're a pedestrian, which is an important distinction, right? And so like if you live in San Francisco, it's a big city, you're not car dependent, you don't need one, but you walk everywhere.
And the stats on car accidents in San Francisco and bike accidents and all that are not great.
It's tragic. I just saw something, I think in the Chronicle the other day that I think in San Francisco, we have 26 pedestrian fatalities a month,
Wow.
which is a lot.
That's like one a day.
I know. And
Wow.
this feels like a very, very safe city,
Yeah.
but we have thousands of people walking the streets and congestion and vehicles and all the things. So there are some non-operator policies that will cover you as a pedestrian or a cyclist, which I think is hugely important as you're just like out in the world moving around.
Yeah.
And then there's a kind of a fourth bucket of insurance, if you will, which is excess umbrella policies. Everyone should have one of these if you are a homeowner. I really should
tell us all about the Cadillac of insurance.
I should get some commission for insurance sales. If there's any insurance companies out there looking to partner.
Affiliate marketing. I think insurance companies, this would probably be one of the last places that they would be. They're going to be the last fangirls that we have, probably, but that's okay.
That's true. That's true. But if you have high underlying liability policy, so that's usually your 250. Most carriers require you to have at least 250 or $500,000 as your underlying policy. You will be eligible to add umbrella or excess coverage, which is usually $1 million, $3 million, $5 million, could be up to $10 million or more, depending on your asset situation. Those policies are not unreasonably priced. Like for a $5 million umbrella policy, you can get that for under $2,000 a year. If you have a lot of assets to protect, that's something that you're going to want to put in place just to make sure, again, you're covered if you go out and you make a mistake and you find yourself in a situation where you're being sued.
Yeah. I mean, I think I put all of this into the bucket of like, now we're adults and we have to do adult things like getting a will, things that maybe in my 20s I didn't really think about.
Right.
And by maybe, I mean, I definitely didn't think about it,
Right.
But now you start to see the world kind of through a different lens a bit. And insurance is one of those things that it like feels like you're keeping your affairs in order.
Right.
Yeah. It needs to be added to the checklist.
But it's also so nerdy and so boring. And I think not a lot of people know about it.
Yeah.
So we're not having conversations about it.
Yeah. But you're on the front lines of dealing with injured people who don't have insurance. So you're seeing the consequences of not having it all the time.
All the time.
Yeah.
And then there's like nuances within policies where if you didn't do, X, Y, and Z by X date, then your policy's void, there's just all these insurance loopholes and different things. So you just don't want to find yourself in a scenario where you're either uninsured, underinsured, or you're in an accident and the person that hit you is in that place and you didn't have the foresight to have your own uninsured or underinsured coverage.
Yep.
You just want to protect yourself.
Okay. I know what I'm doing right after this podcast.
I will do an assessment of all of your insurance policies if you want to send them to me.
They really pay us to have friends in high places, I tell you.
Happy to do that.
Thank you for helping me with myself, save me from myself.
Wait, one more thing I want to tell our listeners.
I was going to say, is there anything else?
Final takeaway tip, because I think it's really important, is that excess policies can offer UIM coverage, but not all do. So if you are a high earner, if you have a lot of assets and you want to protect yourself, again, the UIM is just for you and your family, you want that added coverage, make sure the excess policy you're looking at offers high limits UIM, and it's usually a specialty endorsement that will be issued for your policy. I'm always happy to help friends and family too. So if anybody has any questions, they can give me a call, but it's worth reaching out to a broker when you're getting insurance in place and just knowing what questions to ask will set you up for success in picking the right policies.
I love that. Yeah. And I mean, a lot of this isn't really, I was going to say, I mean, I'm sure that some of our followers or listeners could also comment or DM or ask us questions too. And it wouldn't even necessarily be legal advice you're providing. You're just giving general information or questions to ask their brokers or insurance people and point people in the right direction. So we'll open that up to the groups that want to contact us. Well, thanks, Anjay. Your nerdiness is benefiting all of us.
Glad to be of service.
Yeah. And I think we're going to be talking more about different things that we should do to kick off 2026 in a responsible way, being that we're both nerds in different areas. So this is a great topic. And thanks for sharing your expertise with us.
Anytime.